Good morning, good morning. How's everyone doing today? Nice to have you with me today. Nice Tuesday. The fall weather's slowly kicking in, isn't it? Not bad though. Comes a time where, you have to switch gears. I don't mind switching gears. Been sunny. We enjoyed a really good summer. So I'm okay with going into the fall. How are you guys feeling out there? Feeling okay? Thanks for joining me today. We're going to take a look, as we always do. We're going to take a deep look into the markets, see what is going on, see if there's any trading opportunities out there, and if there isn't, we'll just have a general discussion of what we are seeing taking place in the markets, because there is a lot of things taking place in the markets right now. Okay? And they may not be actionable, but we can definitely learn from them. Okay? So, let's see here. Let me get some of my data up. Okay. Let me bring it up here. Where are you? There you are. Okay. Bring up some of the CFTC data for us to take a look at, if required. Let's see who we got here. Oh, good. A lot of new faces as well as old faces. All right. So what do we got here? We're looking at gold. So gold is a difficult one to read because of what we got going on here on the higher time frames. So recently we had a situation where the banks were luring retail traders into going short. Okay, do you remember that? We were pointing that out here on the chart. Right down here, the banks were luring retail traders into going short. So it'd be nice to make a note of that right here. Template, where's my note? There it is. Banks luring traders into going short. So that's what was happening down here. Okay, so the banks were luring retail traders into going short. They drove price down, and how did they do that? The banks were coming in with massive short orders here. Okay, we could see that in the data. We saw that in the data. Okay, with that big push. Look at that. There used to be 76,000 short, and they increased it to 108,000. That was a super aggressive move. And that's what caused this big drop in price here. Okay, but the whole time that this was happening, a massive area of demand continued to hold. So what happened was they came in with the buying, okay, that reverse price, after all the retail traders were getting into short position. So they pushed it against retail traders, and they started to bring price up to here. Now at that point we had an area of institutional selling here that we had mapped out. And so with price coming up to this area of selling, it led us to suspect that one of two things were going to take place. Either the institutions were going to use that supply to push price down, or they were going to remove it, and that would open up the chart for a move higher. So, logically, if you think about what was happening, all right, we just had the institutions lure in a bunch of traders into getting short down here. Okay, and since we know that the institutions usually want to lure retail traders to do the opposite of what they have plans to do, that would lead us to suspect that they were not going to use this area of supply here to facilitate a move lower. Okay, because they didn't want to drive price lower. Why would they want to bring price lower if they had just suckered in retail traders into going short? So we came to the conclusion logically that what was going to happen was that this area of supply was going to be removed. And once that area of supply was removed, it opened up the chart for a move even higher, okay? Because logically you have to come to that conclusion. If the institutions filled in massive amounts of supply causing price to drop, and then next time price comes up to that area they remove it, that means they have no interest in using supply to drop price, at least for the time being. So that opens up the chart for price to continue higher. Now, if we switch over to the weekly chart, this is the one that is playing out right here. This is the time frame that is playing out right here, because we have two things located on this chart. One is this area of supply created by the banks, and two, we have an area down here of demand. So this is what price is bouncing in between these two areas. And so as you could tell, it's already contacted these areas several times. 1, 2, 3. Look at all these contacts, okay? Several times. So what is happening here? During this whole time of consolidation, we can say December 20, 2021 was when all this started, okay? December 20, 2020. December 20, 2020. So let's look at the data and see what's been happening since December 20, 2020. Let's see. February. Where does February sit in? December, February. That's when price came down. Okay. So let's look at that then. So if we take a look at the data going back to as far as February, we can see that over time the long positions went from 314,000 and now it's at 306. So we're not seeing much of a change there, okay? And if we take a look at short positions, they went from 57,000 to 99,000. So the difference between when price was down here to where we are now is that they increased their shorts, okay? From 57,000 to 99,000. Now, I think there might be something more going on here, so I'm going to have to bring up my my spreadsheet here to take a look at the full data. Okay. So let's let this load up, and we'll look at gold, and we were looking at December 20, right? So December 20. Longs had reached 349,000. Now that would make sense, okay? Because we had such a drive up in price, okay? So at the same time, we had that, okay? So we have 349,000 longs, 70,000 short, and let's now move throughout price and see what has been transpiring, okay? We get to where we are today, and we have short positions have increased, okay, and longs have slightly decreased. All right, now does this mean that price is going to head lower? No, it doesn't necessarily mean that that's what's going to happen, but we can see that they've been taking profits on long positions from here, and we've been tracking that since that time. If you've been following us for some time, since, at least a year ago, you'll know that we've been expecting them to start taking profits on long positions. So that's what they've been doing all this time. Profit taking, and then they add some, and then they take some. So there's really not much going on here that, we can extract from the data that would tell us exactly what we can expect from the institutions. So since there's not much going on here, we have to rely on the charts to be able to tell us where the next momentum should be. Is the momentum going to be to the upside? Should we be expecting it to the downside? And we have our chart signals that we are waiting for on this chart. And until those chart signals come into play, we can't know with any degree of certainty what price is going to do. So this one's really just a waiting game, okay? We're waiting to see what takes place. Because at this point on the daily chart, there's nothing to stop this chart from moving lower and breaking this. That could happen, and it could also hold, okay? The bias is that it will hold, okay? the odds favor a move to the upside simply because of what has been transpiring during this period of time. But we have to come to the realization that we're dealing with a daily chart, and there could be something on the weekly chart that takes precedence over this chart. And if there's something that's taking place on the weekly chart that takes precedence over this one, then the weekly chart will play out in the manner that it needs to play out. So that's all I can really tell you with respect to gold. We are waiting for the chart signals to play out, and until they do, there's not much else we can do about it. So then I look at oil. I was pointing out something here last week, if you guys will remember. We have this situation here where we had a trend line coming down right here, like this. And then we had price come up to it and contact this area, okay, a couple times, and then just sit there. And I was mentioning how, you know, we had this big red candle to the downside, big green candle to the upside, and it looked like it was going to break up like this. And now we've seen that. We've had one tall green candle close on the opposing side of that trend line, and now we're getting this other candle right now on the opposing side of the trend line. So does this tell me that price is going to continue higher? Well, it doesn't specifically say that that's what's going to happen. I mean, it's leading us to suspect that's going to happen. And if I had to say what are the odds are that over time we're going to see price move higher, I'd say the odds are pretty darn good. Okay? Pretty darn good. In fact, I'd have to say, you know, at least over the midterm, multiple days, multiple weeks, we'll be seeing price making moves up towards this area in here. Okay. Now, why would it want to make that move? That's a good question. So we bounce it up to one time frame higher, because remember, whatever happens on the lower time frame is always to facilitate what is happening on the higher time frame. Okay. I mean, just think about how things work, right? If you were going off to work and you lived, you know, a mile away, 2 kilometers away, you know, if you're walking, if you're inside your house and you're walking to your front door, the reason why you're walking to your front door is to facilitate you getting out to your car. Once you walk out your door and you head towards the driveway, this whole action is to facilitate you getting into the car so you can drive and leave your house. Once you leave your driveway in your car, that move is to facilitate you getting onto the highway to get to work, right? So everything that happens on the charts is to facilitate what is taking place on the higher time frames. So that's why we always do a top-down analysis, by looking at all the different time frames, starting from the highest ones and working our way down to the lowest ones. Because if we can determine what is taking place on the higher time frames, then all we have to do is look on the lower time frames for the signs of the charts showing us that it is indeed in the process of doing what we suspect it's doing on the higher time frames. Okay? So it's like, if we don't know 100% that Bob is going to work, what we can look for are the signs of what he would have to do if he was going to work. We'd be looking for signs of him getting his car keys. We'd be looking for signs of him walking to the front door, of walking out the front door and going to his vehicle, of leaving his vehicle, getting into his vehicle, leaving the driveway and heading in the direction towards the highway, you know, getting on the on-ramp towards the all these things are signs that he is going to do what we suspect he's going to do. So when we're looking at the charts, that's what we're looking at as well. Now, this weekly chart plays a very pivotal role in what is happening with oil right now. Okay, so if we look at what is taking place, we have two areas where the banks have created zones. Okay, this top area here is where the banks created supply, and the bottom area is where the banks created demand. There. Now, which one takes precedence? Which one is more important? Okay? If I had to gauge which one is more important, I would say the demand is more important. Okay? If I had to rate these two areas, based on what they have accomplished and their importance, I would come to the conclusion that the demand is more important. So understanding this, it automatically leads me to suspect that over time price is going to do that. All right? So if I suspect that price is going to do that, I'd be looking for signs on the lower time frame that that is what is about to happen. And what would be the sign on the lower time frame? Well, I don't know. Maybe breaking through an obstacle like this. Okay? Because if you take a look, you see how price was staying in this structure. And what was this structure insinuating? That price was going to go down. Right? So in order for this dynamic to shift, this whole structure has to shift. This structure that is insinuating price is going to go down has to change. And it has to provide us with something that starts to look like that is not going to take place any longer. So we'd be looking for signs of, something that looks like this. Okay? So that when we re-examine what we are looking at, we start to see a structure that looks like this. Okay? Which is indicating that the institutions are no longer focused on price dropping, they're focused on price rallying. So this is the exact same thing that I was talking about. When we're looking for signs of what is about to happen or what is price leading us to suspect is going to happen, we're looking for these type of signs. We looked at the weekly chart. The weekly chart is suggesting that price is going to go up. How do we know that? Well, because when we examine the zones that the banks are creating, we have ways of determining if a supply area is more important or more legitimate or is playing a more significant role in what's taking place on the chart, or if it's demand. And in the case of the weekly chart, the demand takes precedence. All right. So that's what I'm seeing here on the daily chart. It leads me to suspect that price is going to go up, and we're watching for that. All right. So what about the data? Is there anything in the data that is suggesting that price is going to go up? Well, we look at what the banks have been doing. We always got to put things into context. Okay. We look at what the banks were doing, and when we had price here, okay, this relates to these positions, okay? And so when price was up there, it was nearing the highs. It was achieving something very important on the charts, which we have spoken about numerous times. And at that time, long positions were 669,000, right? Now, what has taken place since then is profit taking, because if you take a look at those, 669, look at what they've been doing ever since then, okay? Profit taking on long positions. Because where are we at now? We went from 669,000 to 506,000. Okay? 506,000. So their main focus here on the charts have been profit taking from the long positions. Now, you have to admit, price has been rallying for quite some time now, since last year, right? And we called that, right? That move we called. We were able to forecast that up to the 54s and beyond. And so this has all been profit taking, and this drop has been fueled by profit taking because, as I've mentioned numerous times, when you flood the market with selling, it causes price to drop. And that is what's been taking place now. And if you focus on what has been taking place in the media, you'll also find that there has been many stories out there to insinuate that oil is going to continue higher at these highs. Why? Well, because if you're trying to sell your positions, you need somebody to come in and buy. So that is what's been taking place here. So as far as the positions giving us any indication of what is going to happen, all we see is during this phase now the institutions have been profit taking. So that could continue a little bit longer. What we're looking for is signs of a reaccumulation of long positions, and that can very much start to happen in the next weeks, probably months, as price consolidates here, okay? Because remember, we are talking about a weekly chart. Every candle takes 1 week to form, and we are in a range on this chart, stuck in between supply and demand. And it's not uncommon to see price action bounce in between the zones. So we could be talking about multiple weeks here. Let's give them time. Okay? This is a distribution of positions phase. The banks came in with a ton of buying. I mean, they made their fortunes. Okay? The institutions made a nice fortune riding price up here. Okay? Now they want to take some profits. They want to take some profits and then, shift money around, focus on other things that they want to push in the markets. And then when they're ready, when they're darn good and ready, when the other institutions have been able to get out of their positions and they're all set, then they'll start accumulating again. But they're going to have to come out with reasons why people will want to sell the long positions that they got in at the very top of price. Because you're going to have to convince people to sell if you're going to buy, right? You had all these positions, you offloaded them to somebody who was interested in buying, but then now what? Now you want to get back in, you need them to sell to you. So there's going to have to be situations created, all right? There's going to have to be a buzz created in the news, on the media, in the newspapers about oil, all right? So what I would be looking for is signs that, they're trying to make oil not look like such a good investment. Words like, oil being too high priced, or speculation that the cost of oil is going to drop because of an oversupply, something to that nature. There's going to be something. That's what I'd be looking for. All right. Because all signs are pointing in the direction of price moving higher. All signs are pointing in the direction that the institutions have been profit taking on their long positions. All signs are pointing in the direction that this is going to take multiple weeks until this plays out. So we know the time frame to be looking at. We know what we should be paying attention to. Now we just got to wait for the evidence. All right. This is what I would be doing. When people come to me and they say, "How is it that you're so accurate with your analysis? How is it that you're so consistent with your forecasts?" Well, it's because you just have to think on your own. Not listen to what the media has to say. Not listen to what support and resistance has to say. Don't pay attention to indicators. All those things are not going to make you successful. All right? It's reading into it. Being a detective, looking into all the evidence, the clear evidence, and looking at what it is suggesting, and then looking for evidence to support it. And then as the charts play out, you build up your case. And eventually you will get to the point where you see very clearly what is about to happen before it happens. Okay? That's the key. Knowing what's going to happen before it happens. Because after it happens, that's it. It's done. The move's already happened. So we have to know before it happens so that we can position ourselves accordingly. All right. Bitcoin was the perfect example. If you guys have been following me for some time, you'll know that Bitcoin is a perfect example of how to be able to predict the market before it even does what it's going to do. Okay? Because if you were following me, you would remember that, we had price up here in the 55,000 range. And I was telling you about a friend of mine who had purchased Bitcoin up at these highs. And, we were going back and forth about, he wanted my personal opinion on what I thought about Bitcoin because he knows I'm a professional trader. He comes over to my place and he sees my setup and he asks me questions and he's quite intrigued. And so he asked me my personal opinion. He's like, "Well, what do you think about Bitcoin?" I'm like, "Well, we just made a massive rally up in Bitcoin, okay? And what I could tell you is that the banks created an area of demand down here, okay? That was the last time they were buying, and that's what I know to be true, okay? 100%. That's what I know to be true. Now, what I don't know to be true is that after price pauses, after this massive rally, that their plan is to continue pushing price higher. I don't know that to be true. Okay? What I do know to be true is that down here is where the banks were significantly buying Bitcoin. So I would not be interested in buying Bitcoin unless it came down to this area. If it came down to this area and I saw proof that the banks were coming back in with buying, then I would be interested in buying. Okay? But where would my targets be? I'd have to place my targets on the chart in an area where I know that banks would be interested in taking profits and long positions. Okay? I wouldn't be buying at the 35,000 and looking for 100,000. Okay? Why? Because that's pure speculation. What am I basing a decision off of like that? That's pure speculation. And we went back and forth with our discussions with that. And he's like, listen, you got to read this book. You got to hear what they have to say. This is the future, and it's this and it's that. At the end of the day, it's all talk. Okay? I don't make trading decisions based on what people think. I don't make trading decisions based on, wishy-washy analysis. Sure, it can go to 100K, but I don't have any proof that it's going to do that. Okay? When I was looking at Bitcoin, I had strong evidence to suggest that if price came down to 35,000, buying it would be a good idea. And if I bought at 35,000, targeting 52,000 would be a good idea. That's what I had proof of. I could look at that chart, this chart, and know for a fact that buying there and selling there was a good idea. Okay? Whether price was going to go up to 100K, I don't know that. Just because somebody wrote it in a book, that's not good enough evidence for me. And so, that's what I was telling my friend. Listen, I understand your books are telling you these things, but I don't go based on what somebody's opinion is. That's just like, listening to the news and listening to the opinions of people telling you what's going to happen in the future. Nobody knows what's going to happen in the future, and be very careful of when somebody tells you what's going to happen in the future. Okay? Because why were people coming out saying that Bitcoin's going to go to 100,000 when it was up here? Was it because they really wanted you to get in at 55,000 so you can make money when it went to 100,000? Was that really the reason why? Let me ask you something. Those people on TV, those experts that were saying price is going to go to 100,000 when it was at 55,000, when you buy it at 55,000 and it doesn't go to 100,000 and it instead drops, do they owe you anything? Do they owe you an explanation? Do they owe you any money? Do they have to cover your losses? Are they indebted to you in any way, those people? No, they're not. Okay? But what do you think about those handfuls of people that purchased down here and who needed to sell up here to profit in the millions and billions? Do you think they required those experts to come out into the market and say that price was going to go up to 100,000? Yeah, they did. Because if it wasn't for those people to convince somebody to take those positions off of those investors who purchased it down here, how would they be able to exit their position? So do you think those people get rewarded for coming on TV and on the media and making all these things, these forecasts? Do you think they get rewarded? Yeah, because they appear on TV shows. They come out. They get famous. They write books. They have a name now. They can sell. All right? So yes, of course they get rewarded. So what do you think they're really worried about? Luring you into getting into the wrong position, or helping those with the big pockets. All right? And that's how it is. And that's why you can't rely on books and what people are saying, because that's BS. Okay? So what happened with price? My friend said it will never get down to 35,000. I said, why would you think that? And he goes, well, because it's not. It's not. Just look at the chart before. People who said it was going to come down to 17,000, it didn't. I said, yeah, but that's how you would have to think. When price was up here, you'd have to say the only place I'd be buying is down here. That's the only place I'd be feeling comfortable. Okay, so it didn't get down there, so you wait. And then when it makes this move, you say, I'm not comfortable buying unless it gets down here. And if it doesn't get down there, guess what? You wait, okay? What are you in a rush for, right? What are you in a rush for? If it continued going up and they created demand, I would only be interested in buying it here. And if it didn't, I would wait for new demand, and I would only be interested in buying here. I would wait forever until it came down to demand, is the bottom line. I mean, what's the point of doing anything else? He said it's never going to happen. And I said, don't ever say that. Because that way of thinking is what's going to cause you to get in trouble. So he bought 55,000. I said, I'm not buying. 35,000 I will. Okay, well, it's never going to get there. And now it's going to go up to 100,000, and you're not going to be profiting, but I'm going to be profiting. Doesn't that sound like a very greedy person? A person who's only thinking about the profits that they might lose out on? It's not proper thinking. Okay? And I told him, listen, that's the type of thinking that gets people to lose money. But, you know, it's your prerogative. If that's what you want to do, then that's fine. You don't think it's ever going to drop? Well, that's what everybody says until it does. Okay? And then when it does, you're like, oh, it actually did. Well, yeah. Yeah, because people who buy eventually have to take profits. And when they take profits, they want to drop price down. And then there's people that want to make money as price drops. Okay? So that is how the market works. Not based on what someone wrote in a book. That is just to get you to do what they need you to do. So what happened with price? It dropped down to the $35,000 range, and look, it held that area of demand by the banks very well. So isn't that special? How price came down to that area, and look what it did. It started to rally. Where was my target? 52,000. As it was creeping up, it's like, is it going to get there? Is it going to get there? Yeah, it's going to get there. Don't you worry. Why? Because I know for a fact that that's where the banks are going to take profits. Okay? And take a look. Take a look. What happened? Buying from here, rally exactly to where the target was. And my target's been there for a long time. Many months now. Many months my chart has had this target on there. If you guys have been participating in these sessions with me, you'll see that my target has been on this chart the whole time. Okay? And so this is how you make money. All right? Whereas my friend's positions are in the negative. All right? And while he was waiting for price to get back up there so that he can be just at zero, this position was profiting. All right? So that's it. I'm done. That's it. The trade's done. Take my money and walk away. That's a nice trade. 35,000 to 52,000. Pretty nice, huh? Yeah. So I don't need it to go to 100,000 to make money. No. I'm now going to wait for something clear and concise to play out. And when I have strong evidence in my hands of what I can expect it to take place, then I will participate in the market again. If I don't have something strong and clear and concise, I'm not interested. Period. That's just how it is, okay? So, and that's why I can be consistent, and that's why I can be profitable, and that's why I can last in this business longer than most people will. Okay? So, and look at that. Look at how price hit the target there and then reversed. Look at that. How accurate is that? Isn't it nice to know? Wouldn't it be nice to know exactly where you should get into something and exactly where you should get out way before it even does anything remotely close to that? Yeah, that's the power of doing the proper analysis, intelligent analysis. Okay? I like to call it intelligent chart analysis. Okay? Intelligent chart analysis. Because, you know, it's a certain way of looking at the chart and understanding what is taking place. Look at that. Look at the accuracy of hitting that target, and then look at the selling, okay? Look at the selling. That's big players coming in saying, okay, we're done, out, okay? All right. So that has been playing out quite quite well. We haven't looked at the other markets for some time. Let's take a look at the SPX. We're getting a little bit of a pullback. Yeah, we are. We're getting a little bit of pullback. And it's contacting that ascending trend line. Interesting. Would like to see what ends up happening there. Breaking the trend line, moving price lower. Possibly. Possibly. And let's see. A little bit of pullback here. Contacting some demand. Interesting. Interesting. Still trending up to the upside on all the major time frames, monthly, weekly, daily. Just 4 hours is broken. See the US 30. Yeah, same thing. It's kind of breaking. The trend is breaking on the daily chart. Very good. Aussie. What do we have with Aussie? So we have Aussie retracing, contacting some demand on the chart. We had a nice push upwards, a pause, and then a drop. Why is it drop? Because that's what it does. Okay? It don't go up forever. Institutions have to take profits. They have to shake out retail traders. There's lots of reasons why price drops. You have to remain calm and wait for it to play out. Okay? Have to wait for it to play out. We were looking at the Aussie Japanese yen on Friday. We had a level 3 session with students. We were looking at the Aussie Japanese yen, and we saw some very interesting things. We came to some very interesting conclusions when it came to what is taking place on the charts here. So there's some indication that we could be seeing some weakness in the Aussie, okay? And we're talking about midterm weakness. Midterm, multiple days, multiple weeks. So midterm, we could be seeing some weakness. But it also depends on what is going to take place with the US dollar Japanese yen as well, okay? Because we are talking about the Aussie Japanese yen, so the yen is obviously going to be playing a role in how that is going to move in the near future. So this one's a difficult chart to read though, because look at this. I mean, look at this daily chart. This is just ugly. It's just ugly. It's been doing nothing for how many days? How many weeks? Okay. All we know is that prices hit supply. So there's a bias that over time price is going to drop. Okay, and that is also correlated very well with what we're seeing with the dollar and the fact that price is in supply. So, you know, we do have indications that over time price is going to drop with the dollar, drop with the US dollar Japanese yen, and if that happens, then we are expecting, you know, if there's a significant drop on the US dollar Japanese yen, then Aussie Japanese yen will drop, okay? Especially if the Aussie US dollar is in an area where it is vulnerable to a drop. And when we look at the Aussie US dollar, we can see that it has contacted some major demand and it's shifting momentum to the upside, but that doesn't mean that price can't drop. There is that significant possibility, okay? So that can happen. So either way, we're watching the charts, we're prepared. I'm in a position, my position is very low risk, okay? Because I was able to get in early and I was able to move my stop, and it's very low risk for me. So I'm good. And now I just wait. I wait to see what happens. If it drops lower and stops me out, no problem. I'll just wait for another setup and I'll get back in. But I'm not concerned. If it does work out in my favor, it's going to be a very, very nice win for me. Very nice win. And there are very good odds that price will do that. Yeah, intelligent chart analysis. You know, because we have, there's people that do chart analysis, but it's not very intelligent if you ask me. It's not very intelligent. You know, I released a video yesterday on YouTube. If you haven't had a chance, you should check it out, about the banks being exposed, because I'm basically laying it out for you, how this game works. And I'm not telling you that it works this way because I just think it works this way. I'm not telling you it works this way because I read a book that told me it works this way. I'm telling you it works this way because I've been studying the markets for a long time, and this is the conclusion I'm coming to. And I know for a fact that it does work this way because I've witnessed it with my own eyes over and over and over again. And I've used the knowledge. Listen, it comes down to this. If you discover something to be true, how do you know that it's true? Okay? How do you know that it's true? Well, you know it's true. Like if you came up with the formula of how to come up with an answer, like how do you divide something, okay? How do you come up with a way of knowing what the answer is if you are trying to figure out what is 10 divided by 2? If you come out and figure out how that formula works, then no matter how many times you apply that formula, it doesn't matter what numbers it is, you're always going to get the answer, right? So how do you know something to be true? You don't know something to be true because somebody tells you, okay? That's the problem with people today, is that they accept something to be true because somebody told them, okay? And it typically is somebody of some significance, right? It's like Madison Avenue figured out that, you know, if doctors and scientists wore a white coat, then, you know, people would tend to listen to them and look at them as an authoritative figure. And so we've been programmed to listen to authoritative figures. That's why when you watch the news, it's typically the guy who gives you the deep news is an older gentleman, gray hair, like granddad. You know, you listen to him. You probably grew up with him. He's been on TV for many years. And so you listen to these people and you take what they are saying as truth. Well, that's not the way to figure out if something is true. How you figure out if something is true is you apply the logic and reasoning that you are learning and apply it to random situations. And if you do not get positive results from it, then it's not true. Okay? It's not true. So what I've been able to do is study the markets and come to realize, hey, this is heavily manipulated, and it's manipulated in this fashion, and they do it for this reason, and I can tell because the data is showing me it, and I can tell because the zones that were created are of lesser quality, and I can tell because the way that they're moving price, and I can tell because what the retail traders are doing with their positions, and I can tell, and I can tell, and I can tell. Data, data, data. All I was doing was collecting data. That's all I do is collect data, 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 and put the picture together. And if you have the right concept, if you understand what is taking place, then you can apply the logic and the reasoning of what is taking place, and you should be correct in your analysis. The vast majority of the time. You can't be perfect because, you know, you're human and you will make mistakes, but you need to be right the vast majority of the time. And so that's why I'm telling you it is how it is, because that is the conclusions that I have come to. Like I said, I didn't read it in the book and nobody told me. This is from my own observations that I have validated by applying the logic and reasoning to random areas of the chart and getting very consistent results with our forecasts and our trading. All right? Yeah, the reality versus the false story. All right? There's always the real story and the false story with everything. With everything. Unfortunately, that's the world we live in. Okay? When we die and go to heaven, it's not going to be that case. But here on earth, there is a false story and the reality. Okay? And once you tap into the reality, woo, possibilities are endless. Okay? Possibilities are endless if you tap into reality. Okay? When you tap into reality and you apply the logic and reasoning of reality, your possibilities are endless. Happiness will be achieved. Good health will be achieved. Good trading results will be achieved. Happy marriage will be achieved. Being a great parent will be achieved. Being great in your community will be achieved. All the things you've ever wanted to achieve, you will achieve. But you have to understand the reality of the world. Okay? So, so we're looking at these charts and we're seeing that there might be a good chance that Aussie can get weak, right? And we know that the Aussie and gold are very much correlated. So when we look to gold to see if there's any indication of what we can expect from the Aussie, there's not much here, right? Remember what we were saying, that there is a slight bias towards price heading higher. And why is that? Why are we expecting gold to go higher? Well, I already explained it, right? Because of what the institutions were doing to lure retail traders and shifting the momentum and removing supply. So that gives us an indication that over time we could be seeing a push to the upside. And that is also correlated with what we're seeing with the Aussie contacting demand. Okay, but remember, price is in the range in gold and things can change. So we have to be aware of that. So we'll be patient with that, and we're not in any rush. USCAD. So I was looking at this one as well. USCAD is one of those charts that is also doing a bunch of nothing. In fact, it's doing less nothing than most charts. Because if we take a look at what is happening here on this chart, there is no supply in play here. Okay, unlike the dollar, when you look at the dollar, we have massive supply in play. That means the banks created an area of selling, and that's where price is reacting to right now, is that area of selling. So if we look at this chart, there's no area of selling that price is reacting to. It's in the middle of the ocean, right? It's that analogy of, having a ship in the middle of the ocean and the wind has died down. And you're licking your finger and sticking it up in the air and you're trying to figure out, now, where are we going to go next? Okay? We did have momentum. Okay? The wind was blowing, filling up the sails, and we were coasting east for some time. But now the wind has died down. Now what? Where do we go? So there's not much here in terms of the direction. But remember what we were seeing with oil. And remember, oil and the Canadian dollar is tied together. There's a little bit more momentum here. We got a ship. It's in the middle of the ocean. And it's stuck in between two ports. The south port, the north port, right? North port being the supply, south port being the demand. And what are we seeing in terms of momentum? Look at the daily chart. Short-term momentum. There's a brisk breeze kicking in here and pushing on the sails, and it's pushing this ship north. That means it's getting stronger. So if the two are related, USCAD and oil are related, then we should expect to start looking for signs of this chart showing weakness. Okay? So I'm looking for areas of demand that the banks created. I'm looking for those areas to be taken out. Because if price is going to drop, we want them to be filling more supply in this market than they are filling demand. Okay? And so far, I'm not seeing that. So is this a chart I would want to trade? No. This is a chart I'm not going to be trading. I'm going to be staying away from it. And I do suspect it's going to go lower, but I'm not going to start filling in short positions at these highs. That would just be suicide. So I'm not going to be doing that. And when I look at the other US dollar pairs, the US Swiss is not showing me any indication of what's going to happen. The only one that is kind of suggesting that price could drop is the US dollar Japanese yen. And that's only because supply has been contacted. That's the only reason. Other than that, when we look at what's been happening over the last few weeks, there's nothing really going on here. So I'd have to be, basing my suspicions only on the fact that we have contacted supply and it has not yet been taken out. Okay? So those are some of the charts that I'm focusing my attention on. And, really what I'm focusing my attention on is collecting evidence. This is my collecting evidence time, right? I know a lot of traders are like, oh, I'm hungry for trades. I just want to trade now. Okay, okay. Are you dying to lose money that badly? Okay. People are just dying to lose money. Okay. Because when you focus on just wanting to make money, you're going to lose money. That's it. That's how it works. You know, if you were an athlete and you were training for a race, if you were just focusing on winning all the time, and that's all you thought about was just, I want to win, I want to win, I want to win, but you don't put in the work so that when the race day comes, you can actually win, guess what? You're not going to win. You can think as much as you want about winning. It's not going to make it happen. And I know there's a lot of people out there, a lot of books and a lot of stuff, and the power of the mind, and all you got to do is think it and will it to happen, and it'll happen. No, it doesn't work like that. Okay? Why do you think there's so many books out there like that? If it was so easy, do you think there'd be a million books telling you the same thing? All you have to do is sit in your chair and will it to happen. No, it's not going to happen. You got to work. Okay, you got to put in time and effort. You gotta want to win, but that want to win has to be so strong that when you wake up in the morning and you don't feel like training, you train anyways. When you wake up in the morning and you're feeling groggy and you just want to chill on the sofa and put on some reruns of Seinfeld, you're like, no, I want to work. You know, that is what the drive has to make you do. It has to make you want to work every single day. So my focus when I'm trading is work. That's what I'm focusing my attention on, is work. Collecting data, collecting evidence. I'm a detective. My number one job is to collect evidence. That's all I do. And if I'm good at collecting my evidence and collecting my data and doing my analysis, then the chart will tell me, guess what? There's a great trading opportunity here. And it's like, oh, okay. Like, out of all the time I spend, 99.95% of my time is analysis. Analysis and studying of the charts and working with the students, you know, doing the study sessions that we do is so invaluable. So invaluable. The classroom sessions that we do, we get so much information from each session. It's crazy. Crazy. And then that knowledge is applied to the live markets to make us more accurate with our analysis. 99.95% of my time is chart work, analysis, chart study, looking at historical data, collecting evidence, building up my knowledge base of what I know to be true about the markets, building my understanding of what is taking place and why it takes place. That is what I spend. 0.05% of my time is trading. Okay? That's how it is. And your typical trader is like, no, I don't want to spend 0.5% of my time trading. I want to trade 90% of the times and 10% of the times posting on social media about, you know, all the money that I'm making when I'm not losing. Okay? And it's like, I don't want to do the analysis. I got indicators that tell me if price is going to go up and down. I don't want to do the analysis because I got other people that I can listen to their expert advice of. Okay? And that doesn't work. That simply does not work. That's why I always encourage, do the work yourself. Don't listen to other people. It's about understanding what is really taking place in the market, having the discipline to do the analysis yourself, build the skills yourself, build the confidence yourself, and when you have all that stuff, then the market will reward you with the profits, okay? Reap all the benefits and all the rewards of doing the work that is required. And that's about it, okay? That's about it for today. We covered a lot. I hope you are inspired. Like I mentioned, this is not the greatest time right now to be getting into positions, but this is an amazing time to watch the markets, focus on the markets. You remember, I think it was last week, if I'm not mistaken, we had a situation here where we had an area of supply right here, okay? And there was a potential for a trade, okay? And what was it that I said? I said, don't be just getting in short. What I would be looking for is a reversal, okay? It's for price to do this and take out the demand somewhere, I can't remember where it was, and then to create supply and create the chart formation reminiscent of what would happen if the banks were interested in taking price down. That didn't happen, so guess what? No trade. Okay? So you move on. You watch, you wait. If the banks start showing you that they're going to do something, participate. If they don't show you that they're going to do something, don't participate. And that's it. And move on. So really focus your attention on looking at what the banks are doing, okay? Looking at the evidence. Look at the media. Read the news, but don't use the advice. Just read the news and think for yourself, why are they telling me this? Why do they want me to believe this? What's in it for them if I do believe this? What's my instinct, okay? What's my old retail trader self? What was the instinct that I would be getting by reading this? That I should start buying oil? That I should start selling oil? That I should start buying the dollar, selling the dollar, buying the Aussie, selling the Aussie? What would my old instincts tell me that I should probably be doing right now? And your new instinct, what you're training yourself to be, is analytical, critical of all the information that you're getting. What is their whole purpose of telling me this? What are they trying to lead me down? Why are they trying to do this? And what am I seeing on the charts? What am I seeing under the institution's positions? Focus on that. That is my suggestion, and let the rest come to you. Because when you start to empower yourself with this way of thinking, I can't tell you just how much peace will come into your life, okay? Honestly. Because now the fear of trading will disappear, all the anxiety of trading will disappear, because you'll understand what's really going on, and you'll be empowered to and be confident in your ability to understand how to break down information. Okay? So that's it, ladies and gentlemen. So I hope you enjoyed today's session. Do the best you can, and if you have questions, reach out to me. Otherwise, I will see you sometime in the rest of the week. All right? Take care, everybody. Have a good one.